Gold is moving. The big news of the week is that gold is testing new highs, having smashed through previous records. We're going to talk about what happened, what it means, and what's next. Now, before we get started, please take a moment to like and subscribe. Thank you. Today's video is special. We don't normally cover breaking news, but this is just too big of an event not to cover it, and we're excited too. So let's talk about what happened. Gold's prior all-time high was about $2,070 per ounce. There is now a new all-time high, which will be reported on a little differently by different outlets. Gold is traded in futures markets and cash markets, and the prices for each vary slightly. You may have heard the terms contango and backwardation. Contango is when futures markets are priced higher than the cash or spot market, and backwardation is the opposite. Now, the prices in futures markets also affect the spot price of gold. There's also the chance that someone published a number only for that number to go even higher later, which is then published by someone else. So if you've been reading the news, you might be seeing different numbers reported. That's okay. Just a fast-moving field, and everyone is excited. So here's what we are seeing. Depending on which market you were watching and the time frame, the actual recorded high will vary slightly, but it's safe to call the new all-time high at $2,135 per troy ounce on December 3rd. This is the number being reported by Bloomberg, MKS PAMP, Yahoo Finance, and CNN. So what happened to drive demand? Now, the Fed's Christopher Waller made some dovish comments that set off a firestorm in the markets. Two-year Treasury yield dropped 8.9 basis points on his remarks and sparked a movement into gold. Why does this happen? Well, as we've noted in other videos, Treasuries and gold are both safe havens, but Treasuries have a yield where gold does not. The Fed's hawks are making dovish comments. The market starts pricing in rate cuts. If you're expecting rate cuts, then you expect that Treasury yields will drop and gold will become comparably more attractive. Gold also does better when real interest rates are low, or better yet, negative. It's just another instance of traders following the adage, buy the rumor, sell the news. Gold investors are excited about this development because gold now has a new high, and we'll see if a new trading range is established. The question for everyone now is, how high can gold go? With the old ceiling smashed, some traders are betting that the sky is the limit. A word of caution is advisable. The next Federal Market Open Committee meeting, or FOMC for short, is December 13th, with remarks expected December 14th. The official stance will be more clear then. We note that pundits seem to be projecting between 4 and 6 rate cuts next year, off some poorly phrased remarks from a single board member. The official projections from the FOMC meeting in September called for potentially 1 rate cut in 2024, and the market's track record in 23 for predicting the Fed's rate decisions is abysmal, to say the least. It would not be surprising, therefore, to hear more tempered remarks, perhaps the Fed reiterating a wait-and-see approach on December 14th. Further dovish remarks would likely increase investor enthusiasm for gold, and we would be unsurprised to see that enthusiasm reflected in gold's spot price. As always, we encourage our viewers to do their due diligence, research, and make wise investment decisions for themselves and their families. That's all we have for you today. Please remember to like, subscribe, and share with a friend. Thanks for watching, and we'll see you next time.